Welcome back, everyone, to the latest episode of Business Insights Unwrapped. Today, we're taking a close look at Moderna and their recent financial performance. Joining me is Morgan, our in-house expert on biotech markets. Morgan, thanks for being with us today.
Glad to be here, Alex.
So, let's dive right into it. Moderna's Q4 revenue came in at $1.1 billion, which is starkly lower than the previous year. They reported a full-year revenue decline of 53%. What do you think drove these results?
That's right, Alex. The significant revenue drop can be attributed to a combination of decreased demand for COVID-19 vaccines and a lack of new product launches last year. In Q4 alone, net product sales were $900 million, which actually aligns with their revised guidance, but still, it's a stark contrast to the previous year's performance. Notably, they reported a loss per share of 2.91 compared to a profit of 0.55 just a year prior.
That's quite a shift. It's important to remember that the cost of sales was around $1.5 billion, making up 47% of those net product sales. But there was a non-cash resizing charge involved, right?
Exactly. If we exclude that resizing charge, the cost of sales would have been 39%. This highlights that despite the drop in revenue, the company is being impacted severely by those costs. However, they have managed to maintain a strong cash position with $9.5 billion in cash and equivalents.
Speaking of cash, that increase from Q3 is telling, isn't it? Mainly due to collections from accounts receivable. Does this signal anything about their operational execution?
It certainly does, Alex. The 3% increase in cash flow indicates that they are effectively managing their receivables, but despite that, the broader sentiment in the market has turned negative following the earnings announcement. The stock saw a drop of over 5% in pre-market trading.
Yes, and that follows a downtrend where investors were already anxious about their capacity for profitability, particularly with a free cash flow deficit of nearly $4 billion over the last year.
Right. The market expectation was already cautious, and when Moderna missed revenue targets, $966 million compared to forecasts of $995 million. You can see why investor confidence took a hit. Analysts are now closely monitoring their strategy moving forward.
Speaking of strategy, Moderna has ambitious goals, looking to secure 10 product approvals over the next few years, eyeing a potential market exceeding $30 billion. How do they plan to achieve this while managing these financial difficulties?
Great question, Alex. They're focusing on cost management and operational optimization. Interestingly, capital expenditures came in about $150 million below prior guidance, suggesting they're prioritizing financial discipline. However, the challenge remains to diversify their portfolio beyond COVID-19 products, which are declining.
And with new products already filed, they're taking proactive steps. But the market's skepticism is palpable, especially after the stock's performance over the past few months.
Yes, the dominance of pandemic-related revenues in their financial model has created vulnerabilities. The leadership's emphasis on sustainability and innovation is crucial. It's a balancing act. They need to control costs while investing in future growth.
So, given all this insight, how do you see Moderna's future trajectory?
Well, if they can successfully manage their operational costs and pursue those product approvals, there might be light at the end of the tunnel. However, they need to rebuild investor trust and clearly communicate their growth strategy. The broader biotech sector is already facing skepticism. They must stand out with sound execution.
Valuable thoughts, Morgan. Moderna certainly has a steep hill to climb, but with strategic focus, there could be a path forward. Thank you for your insights today.
Always a pleasure, Alex.
Thanks for tuning in, listeners. Don't forget to subscribe for more in-depth analyses. Until next time, stay informed and engaged.